Hi, and welcome to Sisters for Fi, where the FI stands for Financial Independence. My name is Catherine Agapchan. I am a financial educator, and here at Sisters for Fi, we help you manage your money better so that you can live a life of impact today and tomorrow. In this channel, we provide money lessons so you have more money to live and to give. In this video, we are going to cover a very common question. And the question is, should you pay off your student loans or invest? Now, if you are about to graduate from undergrad or graduate school, this might be a question that you are going to be contemplating in the next few months. If your student loans are part of the forbearance period from the federal government, this might also be a question that you're going to start thinking about, especially since the forbearance is about to end as of this recording on May 1st. When it comes to this scenario, pay off student loans or invest, you basically have three options. Your first option is to pay down the student loans as quickly as possible. The next scenario is to pay the minimum and invest the rest. And the last scenario is to do a hybrid approach where you pay down the loans and invest what you can. Now, all of these options are well and good, and some are very straightforward, but depending on a few factors, you might want to reconsider which approach you take. The biggest factor when you're deciding whether to pay off your student loans or invest will most likely be interest rate. An interest rate of below 5 to 8% on your student loans might mean you can get more of your money in return if you invest. Now, interest rates is one factor, but we also have to take into the human behavior aspect of having debt or wanting to invest. For certain individuals, having debt may be something that does not sit well with them. It keeps them awake at night, it keeps them from being able to truly function or be able to get comfortable with money. So, if this is you, I would recommend sitting down and figuring out all the debts you have and putting in a plan in place to pay those down. Now, depending on how much debt you have or what kind, you may need to pick an approach that works well for you. In the next few minutes, I will share with you a tool that can help you decide how to approach your debt payoff plan and get yourself a date locked in so that you have a plan in place to be debt free. Now, historically, the stock market has returned on average around 8 to 10%. And if your debt is below 8 to 10%, there's a likelihood you would make more money investing. But again, it comes down to the few factors I mentioned. Another factor that you might want to consider is whether you have federal or private loans. As we have seen in the past 2 years, there are some protections provided for federal student loans. For example, those who had federal student loans were part of a forbearance period where they did not have to pay their student loans for almost 2 years, which meant you might have been able to focus on other debt or invest. Now, with this forbearance ending, it might be time to reassess and review what your options are for investing or paying down other debt. The other factor that might affect your decision when it comes to paying down student loan debt or investing is what kind of tax advantage accounts do you have access to today? This might mean if you are about to enter the workplace or the corporate environment, understanding and knowing if your employer offers a retirement plan with a match where you can instantly double your money if you put in money for retirement. This might be understanding what other retirement accounts you can contribute to that will provide you tax advantages today or in the future. What I will do now is walk you through a tool that you can use to prioritize your debt. And I would recommend this tool or something similar to help you map out your debt-free payoff plan. And it is a free tool. I did not create it, but it's something that I found very useful, and I think you might find it too. This is not a sponsored video and post as well. Tool is something that you can use whether you are aggressively paying down your debt or doing that hybrid approach of investing strategically and paying down debt. as well. Now let's move to the debt reduction calculator tool that I've been mentioning. This is a free tool that you can find at vertex42.com. I will share a link in the description so you can access it. And basically, they provide you templates to help you calculate and create a debt payoff plan. The templates come in two formats, either Google Sheets or Excel. And what I love about it is one, it's free. This is unsponsored. And two, it's portable. So this is really yours to take, yours to manipulate and change so that you create a debt payoff plan that works for you. And let's head to the template, and they'll provide, I'm going to use the Google Sheets version for this because it's accessible, and they will have the option for you to create a copy of this template. I will show you how to enter all of your loan information and provide you kind of some scenario planning so you can walk through what it would mean if you pay one off or if you add an extra $100 for payments, and see how that affects your student payoff. Now, regardless of which method you use, whether you pay all of your student debt upfront or you do a hybrid method where you pay down and invest at the same time, you need a tool like this. Doesn't have to be the same one, but something similar to this to help you manage that debt and really figure out your plan to pay it off. Sometimes having the month and year where you will be debt free can be very motivating and promising to ensure you stay on the right financial path. And here is to copy the template, and I have entered some information here just so that we can get started. Basically, I have my balance date, so this is just a snapshot of what my balance is as of the end of March, and I have some of my loan information. Now this is split between specific creditors and the balance, as well as rates and the minimum payments required for these. So you would list all of your loan information. Some will vary depending on what the interest rates are, the balance for your loan, so make sure you list them. This particular template, the free version, goes up to 10 rows. If you do have more, you'll need to pay an upgrade to be able to list up to more than 10. But I think this will be sufficient for our example today. And what I've done is created federal loan, subsidized, unsubsidized, a private loan number 1 and number 2. For the loan subsidized, I just looked up a reasonable rate, federal rate, from the past few years, and 4.53 was the highest, I believe, in the past few years. And you'll also see unsubsidized at the same rate. Remember that unsubsidized means you start accruing interest while you are still in school. So this is something that you might want to prioritize to make sure you manage this first, because interest on interest really does add up quickly. Private loans here in this case is a little higher at 8% and 7.5%. This could of course change and vary depending on your credit scores. So while you are going to enter these higher rates, you just want to be aware that if in the future you're going to apply for a separate loan, you want to make sure you improve your credit score in the long term. So I have a balance of around $21,600, and my total payments for the month is $472. Now, depending on your budget, so you will have to make sure you have a budget to ensure that you're not only paying for today's expenses, but also being able to pay down this debt. And say you have $600 to go towards debt account, and this is what you've calculated because you've put down a budget and you know exactly how much money you have left. That means that you have $128 to be able to put towards debt payment. Now, what I love about this tool is that it provides you multiple scenarios of whether you choose a specific debt payoff strategy. Your first is your avalanche, which uses the highest interest first. So here are your options. So if we do avalanche highest interest, then that means that we would be paying down our private loan number 1 at 8%. And here is the listing of that. So it's $5,000, and it provides you a date of when you can pay it off given your current plan and schedule, and you'll see the rest of the payment schedule as well as when you'll be able to complete some of the pay down for this debt. Now, of course, if Avalanche is not something that you want to, because it's Avalanche does save you more money, but it can be a little demotivating because the wins can be slow. You can use the snowball option, and the snowball option means you start with the lowest balance. So in this case, it's the unsubsidized at $3,200, and here you'll be able to pay it off by May 2023. So almost a year before you would have been able to pay the private loan, and that early win can motivate you to kind of speed up your debt process. Now, there's all the other options here, so you can do a custom depending on how you're looking at some of your debt in this case. So you'll just adjust. Again, a lot of this is also scenario planning. So if something happens and you need to adjust and make changes, you want to be able to do that and account for that. And what I also love about this tool is that you can kind of create a copy of the sheet so you have a snapshot in time of where you are, perhaps a month from now, a few months from now, with your debt journey. One of the things I love about this tool too is that it comes with a payment schedule, and this payment schedule provides you with the amounts for your monthly payments for all of the years you'll have this debt. And for this particular strategy, we're using Avalanche. It's the highest interest first. We have $600 to put towards our debt, and that means we'll be tackling private loan number 1, which had an 8% rate, the highest across all of the loans. And if we work through, you will see all of the payments you will need to put towards all of your debt. $246 for private loan number 1, and you still need to make sure you're meeting the minimums for all of your other debts to ensure that you're paying them, and also ensures that you are not going to ding your credit history and score over the long term. Timely payments is a big factor when it comes to your credit score. For private loan number 1, the estimated payoff is January 2024. Now, I want you to also use this schedule for some scenario planning. So what if in December you receive a cash gift and you want to put money towards that? So let's put $150 here towards that gift, and maybe you started a side hustle. A few months after that, you're earning $50 extra a month that you're putting towards your debt. Here's another one for $50 towards debt. And what you start seeing is your debt balance go down. So now, instead of us paying down this first loan January 2024, we will be able to pay it down December 2023. And what a great way to end the year for that. So as you work through, perhaps you make more money over the years, plan ahead and plan to make sure that you're paying down the debt as you see fit and as it makes sense for you, given that you do need to balance like living in the present, paying for the past, and perhaps investing in the future. This calculator can be found at studentloanhero.com. Again, I will link all of these in the description so you can use it and figure out your strategy. Towards a second tool that can allow you to calculate whether it makes sense to pay down student loans or invest. It doesn't provide as many bells and whistles as the previous debt reduction tool, but it provides you an idea of what investing an extra dollar can mean versus paying down the loan. For this example, I'm taking the numbers straight from our debt reduction tool. So we have a total of $21,600 as our debt, and then our monthly minimum payment is $472. We have $600 to put towards debt or invest, and at $128 that we need to decide, is it better to use it to pay down debt or is it better to invest? So using those numbers and as well as the average of your rates, I've entered those here, So I have 21,600 as the balance, 6.14 as average interest rate, and you have a current monthly payment of 472. The other scenario will be to put into your retirement savings. So $1,000 at 8%, I'm being conservative here, 8% return. You're doing a monthly contribution of 200 and you're doing that for 30 years. Now, again, some of these numbers will absolutely fluctuate depending on your situation, but I think it's good to get an idea of what the numbers would look like. You have the extra 128 and you need to decide if it's worth putting it into your student loan debt or to invest. Now you'll have some numbers here. So this area here will show you your options if you pay down debt. So with the original amounts and you're putting in a monthly payment of 472, that's the minimum, you will pay around $3,000 in interest and pay down your debt in 4.4 years. But if you use that money towards paying down debt, you will save around $737 in interest and be able to repay all of your debt within 3.3 years. So you save yourself 1 year of perhaps debt worry and debt management. Then the next scenario will be, what if you invested that instead? So if you invested that money with the original, you would have earned 78,506 for interest earned, and the final amount is 87,506 for your final amount. Now, what if you invested that money instead? So 128 goes towards investments, and it means you will have an extra 49,000 into your nest egg should you do that. So here is your breakdown. If you pay down debt, you would save 737 versus if you invest, you would probably have earned 43,885. Again, scenario planning is a great way to ensure that you have the right strategy in place for figuring out if you should pay down student loan or invest. Lastly, I want you to be aware of other factors that will also affect your decision. A big part of it is personal beliefs and mindset about debt and investing. The second is access to tax advantage investing accounts. I will leave a link up here as well as in the description about what those tax advantage investing accounts are, what you may have access to today, and how that access points will change in the future. And of course, keep an eye out on the legislation as it could change the future of student loans. As you figure out your debt payoff plan, your other work is to figure out what other tax advantage accounts you can contribute to today. Many of these are dependent on your employer, so you may want to look into your employee handbook or guidebook to see what is available for you to contribute to or take advantage of. Doing so and contributing to these accounts early on can mean tax advantages today, as well as the potential to grow and invest your money very early on, and or the opportunity to also get a match from your employer, which increases your investments. I will also leave in the description as well as in the cards some links to other videos to help you figure out what accounts could be helpful for you to fund and contribute to today. I will also share that when I graduated from college many years ago, I too had student loan debt of around $20,000. Now, at that point in time, the interest rate on my debt was around 2%, and it was all federal student loans. So I did not find it necessary to pay down that debt as quickly as possible. Instead, I was able to invest through an employer-sponsored account as well as in a Roth IRA for myself and for my future. For me, that worked out. What I also realized as I worked in my career, worked to gain more income and then get a higher salary, was that I could absolutely change my plan to pay down debt or invest at any point depending on what I had access to. So as you work in your career or have opportunities down the line, make sure you reassess your plan to pay down debt or invest so that you're taking advantage of some of these new benefits that may come to you. I hope this video has been helpful. If you found it so, please give it a thumbs up and share it with someone who might want this information. It's always good to have someone you can talk to about money, debt, and the plan in place for investing. If you like this content and want more, consider subscribing to Sisters for Fi, where we share money lessons every week to help you manage your money better so that you can live a life of impact today and tomorrow. I will see you in the next video.